something is bubbling beneath the surface of the Pi network charts. And it might be about to explode. Prices are tightening, volume is dropping, and all eyes are locked on one critical zone. Will Pi hold the line, or are we about to see the price plunge below 77 cents and trigger a much deeper correction? You're about to find out. Today's analysis reveals what traders are watching closely as Pi moves in silence, but not without tension. So here's the big question for you today. Will Pi bounce or break below the $0.774 level? Is this just a healthy pause before a rally, or are we about to see the bears finally win? Drop your predictions in the comment section below, and if you're just catching up, don't worry. Check out my previous videos for all the latest on Pi network developments, including the main net launch and the KYC bottlenecks. You'll find the link down below in the description. Now before we get into the juicy part, I want you to do 3 quick things. Type Pi Network to the moon in the comments, and let me know where you're watching from by dropping your country name too. Also, hit that like, share, and subscribe button to support the channel and keep this Pi content flowing strong. Don't forget to join our Telegram and Facebook page for even more Pi discussions. And hey, friendly reminder, this video is for entertainment purposes only and not financial advice. So take a deep breath, grab your popcorn, and let's get started. The Pi network is doing something we've seen 100 times before in crypto, the calm before the storm. Right now, price action has stalled just under 78 cents, dancing tightly between resistance and support like a tightrope walker balancing on a wire above a sea of uncertainty. It's not moving much, but that might be the biggest sign that something big is coming. Let's unpack what's really going on behind the scenes. The last few days have been eerily quiet. Pi has hovered around $0.7766, barely moving a muscle. But traders aren't fooled. This kind of silence often screams tension. If you zoom into the 4-hour chart, the candles are getting smaller and smaller, boxed in by converging trendlines and stiff resistance just beneath 80 cents. It's like watching a lid being clamped down on boiling water. The pressure is building, and eventually it's going to blow. For now, both sides, the bulls and the bears, are digging in their heels. Bulls tried to reclaim higher ground earlier this week but couldn't hold it. Bears responded by pushing the price back down from the 79 cents 80 cents area like an iron ceiling, repeatedly slamming shut any breakout attempts. Underneath it all, exhaustion. The charts show it clearly. Momentum is fading. The bulls look tired, out of breath after trying to hold up this fragile trend line that stretches all the way back to May 15th. And now, the big question is staring everyone in the face. Is this consolidation just a pause or a trapdoor? Looking closer, the 4-hour chart shows Pi crammed between $0.774 and $0.783. The Bollinger Bands have tightened so much it's like someone took a clamp and squeezed them shut. That usually means one thing. Volatility is asleep, but not for long. All 4 key EMAs, the 20, 50, 100, and 200, are tangled together between $0.779 and $0.784. That's not a sign of strength, it's confusion. Price is floating right in the middle of that messy cluster, with no real direction. No one's in control, yet. There's a bigger story playing out too. A descending wedge has been forming ever since May 12th, and it still hasn't broken cleanly in either direction. Think of it like a slowly tightening funnel. Right now, Pi is bouncing weakly off the bottom, struggling to push above $0.7955. Each time it tries, it gets rejected, again and again. Even worse, the lower support around $0.774 is getting softer. Buyers aren't stepping in like they used to, and when buyers start getting nervous, that's when things start to break. Now step back and look at the daily chart. You'll notice the triangle that's been forming since early May. Pi is just barely clinging to a support trend line around $0.7336. It hasn't broken down yet, but it also hasn't confirmed a breakout. It's just stuck. If $0.774 breaks, that could trigger a slide all the way down to the $0.733 area, maybe even as low as 70 cents or 68 cents if the floodgates open. So what's the data telling us? Well, let's talk about the RSI first. It's hovering below 50, around 43. That means the bulls have lost control of momentum. The MACD on the 4-hour chart, not looking good. The signal line has crossed below the MACD line, and those red bars on the histogram, yep, they're getting longer. Short-term strength is fading. The Shande momentum oscillator is deep in the red, down at -53. That's not just a small dip. That's full-on bearish pressure. And the stochastic RSI on the 30-minute chart is hugging the bottom, stuck below 10. That's usually a sign a reversal might be coming, but without strong volume, it could be nothing more than a dead cat bounce. Then there's the Ichimoku cloud, the mystical fog that shows hidden resistance zones. On the 30-minute chart, Pi is still trapped beneath the Tenkan-sen and Kijun-sen, sitting right around $0.779, $0.782. The cloud is thin and weak, showing no real trend strength. Unless Pi breaks cleanly above $0.7846, the bulls are going to stay in the fog, groping for direction. So where do we go from here? The critical resistance is staring us in the face, 79 cents to $0.795. If Pi can muscle through that zone on strong volume, it would not only break out of the triangle, it could ignite a rally all the way up to $0.833 or higher. But that won't be easy. On the flip side, the $0.774 support is the last stand. If the $0.774 support level crumbles, Pi is likely heading straight into a critical danger zone between $0.7505 and $0.7336, with potential pit stops at 70 cents and $0.682. And yes, that $0.682 level is especially significant because it aligns with the 78.6% Fibonacci retracement, a classic target in technical analysis where major reversals often occur. A breakdown into this range could spark panic selling or trigger automated liquidations, making the drop even sharper. Traders and investors alike are holding their breath as all indicators flash yellow, warning of rising bearish pressure and declining momentum. This isn't just a dip, it's a psychological battleground, a moment of tense hesitation where the market feels like a boxer stepping back, coiled with energy, just before delivering a powerful knockout punch. Whether it strikes upward or falls flat depends on what happens next, and it's only a matter of time before the bell rings. Will it be the bulls landing the hit, or will the bears finally take control? This kind of sideways grind is a classic setup for breakout traders. Everyone's watching the same key levels, $0.774 and $0.795. Those two price zones will act as the trigger for the next big move. If you're in the market, you've got to stay alert. Because once Pi decides, it's going to move fast. And with sentiment still fragile and community expectations riding high post-mainnet, every little movement in price is going to carry extra weight. So here's the bottom line. We're in the final stages of compression. The price is coiled like a spring, and the fuse is getting shorter. Pi is either going to break upward and give the bulls something to cheer about, or it's going to slide lower and force another test of those long-term demand zones. So, to wrap it up, Pi Network is currently stuck in a tight price range, balancing between critical resistance near $0.795 and key support just above $0.774. Indicators show weakening momentum and growing bearish pressure, but a breakout is still possible if volume surges. Whether it breaks out or breaks down, one thing's for sure. The next move is going to be explosive. Now don't forget to like, share, and subscribe to support this channel. It helps us bring you more in-depth Pi Network